Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for August 14th, 2017. Happy Monday, everyone. I'm Frank Ochoa, aka Pivot Boss. Here's a look at the daily time frame of the ES. We got a nice pullback here in the ES. Finally, this was a nice rejection day here. That rejection day high was the first time we had seen the market do that. And this is what we mentioned before. Remember when I mentioned how tightly coiled this market was getting? And I mentioned that typically speaking, because this market is so narrow, you tend to see a breakout in both directions. The first one is usually a false one, and the second one can usually lead to a big push in the opposite direction, right? So up here, false move, and then a big swing in the opposite direction. So that's what I was mentioning earlier, just ahead of the breakout, is that when these markets get so tightly coiled, the first move can also oftentimes be false. And if it is false, you can jump in up here to sell it anywhere in this zone that day or the next day in order to get in ahead of the big continuation downward. Now, I did also mention that 36 to 34 and then 40, that was our support zone down there. And if price hit that area, that was likely a target. FOMC key level here being reached. And it's also an area of support, 24.40. That's what I mentioned. When it gets back to the zone, there may be a bounce back up towards 64, 65, 70. And from there, we could have a near-term key range to watch off of that impulse move. So again, as I mentioned before, while we are seeing some counter trend rotations here, the major trend remains bullish, and these pullbacks are still buying opportunities for a continuation higher. So there could still be much more strength ahead, but what we want to watch is to see if this thing can get back toward the midpoint, which is a little bit higher, 2460 or so. Once that happens, we have a great key range to play off of for near-term movement. So that's going to be nice. All right, so on an intraday basis now, let's take a look at the intraday real quickly here. The ES has bounced very nicely after the two-day pullback, 2 or 3 day pullback. And right now, after a bullish overnight move and pre-market move, we're now holding at highs. And so most of the pre-market has traded in this zone here. That means that bulls may be overextended at this time, and if there's any failure to hold 24.50, we could see a rotation back down. But pullback still buying opportunities into 24.40. Overall, given this trend here, pullbacks are buying opportunities still. So something like, for example, back in the S3 may be an oversold point to bounce this thing back up. So right now, trending up on this move. Expectation is for a little bit higher here into the midpoint of the larger swing move, and from there we may have something very nice to play off of over the next few weeks. So that's going to be nice. Now let's take a look here at crude. Now if you take a look at crude in the higher time frame here, this one is becoming, here it goes. This one's becoming rather difficult to read here at this current price level. We had a nice squeeze before. Remember, we had a nice retest here after prices failed to hold this zone. So we've been right on top of that. Up here is where we got the big break through the top of this kind of ascending pattern. Major push up. And then I mentioned before, I keep saying, coming back to 47.65, even as deep as that area, is still a buying opportunity for bulls to try and reach 52s. But right now you can see this upper channel here, this upper trend line in play. Price is basically, that's been the market here. And when price gets up here and holds, especially at value, if these bulls don't get paid, we could be looking at another rotation downward. And that could bring us again back toward 42s, perhaps as low as 40. So this is a very important range right now. Again, very difficult to read at the moment. As long as this level remains intact, I think bulls still have a shot. But as soon as this level gives way, all of these late bulls here may jump ship and you start to see this type of behavior. So right now, that's the zone to watch. If we take a look here at the gold market, now the gold market has rallied right into our upper target zone finally. We had support where price failed to hold this low here. That's failed range expansion. When price pops back up, it still looked like a lower high until that day right there. That day was the failed range expansion to the downside, and we started to see the squeeze. Pre-market is when I mentioned this is it. If we can start to climb above 1230, it's going to be a full-on move to 1250 and 1260. We got both of that. And then if we got those targets, then we would start focusing on the upper end of the range, 1295 to 1300, and we got that. So right now we've gotten the entire move all the way up. And this is when I mentioned this is usually the most difficult part in the chart, is after a successful move, because now you have to wait patiently. And at this edge up here, it's easy to say that we're likely just waiting for rejection, a pattern of rejection, which can be 1 or 2 days, or it can be up to a week of building out up here before it returns this way. And there's nothing to say that it has to turn around. As soon as 1300 is crossed, the next upside levels are 1350, 1375. Now, if you see 1375 in gold or 1400, I mean, that's going to be the big time long-term sell zone. So right now the expectation is that perhaps we go a little bit higher above 1300 because we haven't taken out the recent high. And then if we do see a more meaningful pattern of rejection, the idea is that that pattern of rejection would help us pull this thing back toward 1250, right? So that would be an indication that we're seeing rejection, return it to value. That's currently 1250. So that's the idea with gold. Looking lastly at the NQ, what you'll see here in the NQ is a very nice continuation to the upside overall. We failed to see any acceptance above the 5907 half key level. That's the top of the key range. And that ultimately led to that pullback. Now, this was different than the ES. And at the very least, 5729 usually is hit if there's a failure to hold this zone. So after all this failure here, we see the stops come out, but we didn't hit 5729. And that's curious there. Typically, you at least see the midpoint retest, and then from there, you may see this thing come back up. So that's going to be something to watch out for. There may be a double dip down, perhaps even a move across. But overall, any pullback right now, perhaps even into 5800, could be an opportunity to try and get this thing going higher again. Keep an eye on the previous month's close. That could be an early indication of weakness. And again, if some reason this thing drops into 5500 to 5550, that would be a big time area to defend as a bull for a longer term perspective. So that's the idea with the NQ right now. Right now, keep an eye on that previous month's close. If there's a rejection there, we may see a bit of a pullback to come. All right, that's it for now. Let's see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you soon.